Hi, welcome to Decode REI. My name is Mina Rickey,
And I'm Lydia Korczak.
and today we are interviewing Brian Cohen, president and co founder of Andover Properties since 2003. He is a seasoned real estate professional with a proven track record spanning self storage, industrial, and car wash properties.
With a strong market presence in the key locations like New York City and northern New Jersey, Brian has propelled Andover Property to become one of the largest private owners and operators of storage facilities in the United States, reflecting his visionary leadership and commitment to success.
And Brian, thank you and welcome to the show.
Thank you for having me.
Yes, thank you for coming over. So we just came back from SSA, Vegas. We seen you there. You were very busy doing different panels. Tell us who you are and what you do.
All right, so I'm Brian Cohen, the CEO and president of Andover Properties. We are global investor of alternative real estate asset classes. We started our business about 20 years ago. We started developing self-storage facilities. So that's kind of how we got into kind of the niche space of real estate in general. And kind of through that, through the evolution of time, we basically, from developing storage facilities, acquiring them, we've started moving in other forms of kind of alternative real estate asset classes. So we would take a 20-acre property and then we would build a self-storage facility. We'd build a car wash. We would build small bay warehouses or small bay industrial. We would build a lot of enclosed and covered boat and RV parking. So that's kind of how we, kind of morphed into all sorts of alternatives for the real estate sector. So we kind of stay away from office and multifamily. We've also, started getting into mobile home parks and RV parks as well.
I see. I saw that your father works in the same company. Would you mind sharing a little bit about how you guys got to start working together and actually how did Andover Properties started?
Sure. We started in 2003. My father was in the clothing manufacturing business, so nothing to do with real estate. I worked for one of the largest real estate development companies in the country, Tishman Speyer. And I wanted to start my own real estate company because I knew my name was never going to be Tishman or Speyer. So my dad had gray hair, and I thought that would be, I have a little right now, but I thought that would help with the initial fundraising, and which it did. And so we set out to develop. Originally, we set out to convert industrial buildings into multifamily, and we actually raised the capital for that development, but it happened to be a self-storage facility in Greenpoint, Brooklyn. We wound up going to a self-storage conference and kind of realized that there was a lot to do in the self-storage space. It was, back then, the only form of marketing was the yellow pages, and there was no technology being used for any of these facilities. And we started loving the attributes of self-storage. So kind of went out and started, set out to build our first self-storage facility, which happened to be in Newark, New Jersey.
Wow. Usually you hear people getting into multifamily, not self-storages. And a lot of people ask me, Lydia, why did you switch your energy from multifamily and self-storages? Who better to ask this question than you, Brian?
That's true. Right. Because we actually did set out to do multifamily and kind of just, pivoted in the other direction, and more for the reasons of, if a tenant leaves your self-storage unit, your self-storage facility, you don't have to repaint the walls. You don't have to change out the toilet, which is probably usually broken or stained. So, there's very little you have to do except sweep. And you might not even have to do that. So it's very easy in terms of releasing units. It has the lowest percentage of CapEx as a portion of your net operating income. So that's what makes self-storage very attractive.
Yeah, we heard it in a conversation with somebody. It doesn't have the three T's: no toilets, easy turnovers, and
Tenants.
no tenants. I mean, easy tenants. You have power over the self-storage compared to multifamily where you can evict them if you're in the right state or wrong state. So you started in 2003,
Yeah,
Brian?
that's right. That's correct.
So it's been 20 years. You've been through a couple of market cycles, and see what we're seeing today. I think we must ask the question of where do you see the next market cycle going towards? What do you think it's coming? I know nobody has a crystal ball, but you are very in tune on with the market.
Well, look, I think we're at a precipice of a very kind of dangerous time in commercial real estate in general. So there's because a lot of people refinanced all at low levered loans, and a lot of the PE shops, anyone who bought late stage has been buying over the last few years they were buying with typically short term floating rate debt, and the growth out of all these assets, whether it's multifamily, self storage, any of it, it's like the inflation factor is not keeping up because there's been a lot of supply in a lot of the different markets. So you're not going to be able to necessarily inflate your way out of it if interest rates don't come down. And unless you see a pretty significant recession, interest rates probably are not going to come down. So it's going to be a rocky road ahead for a lot of owners in all forms of real estate, not just self-storage. So we may take a couple of bumps ourselves, but we positioned ourselves to we've taken off we've sold a bunch of facilities over the past year. We are going to be selling some more, but we're also we've also been now buying loans from some of the banks, and we're starting to create a loan origination business as well, because it's a very good time over the next few years to be in the credit side of the business. So we feel like we can get equity sized returns by lending money. So you don't have to take the risk of owning a property where you can actually go out and lend to another developer or owner.
Yes, because there's going to be a need for money. So that's where the market is dictating. I enter the multifamily, the commercial real estate in general in 2020. So all I've seen is up and 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 up. And everybody has been telling me, just wait, just hold on, Mina. I promise we're going to get to the top of the mountain, and then the opportunities will start to come your way. It's just been a little bit frustrating because as a newbie, you're excited, you're ready to go, and then the market is not there to support it. So now the market is changing. Anybody that has some money, especially sitting on a RIA, what is it? RIA, the
Which one you're talking about?
we were talking about the people that have money on their 401ks.
Oh, the 401k and IRA, self-direct
Thank you.
IRA, sitting on their retirement packages.
Yeah, what should they do with that money? Where can they find seasoned investors that they know that are not just newbies getting excited about it, but they are seasoned, they understand what's going on, and they can see both sides of the market. They can make money on both sides.
Well, look, I think as anyone investing their hard-earned money and their retirement money, they always have to be careful. Especially, look, you can put your money you could buy a 2-year treasury almost at 5%. So, which is an incredibly safe place to put your money. If you're going to invest your money in real estate, I'd say you have to make sure you're investing with the right operator and the right owner, someone who's proven and who has a pretty long track record with both putting out retail capital, but really has tremendous amount of institutional backing, because that's where a lot of people, over the past couple of years raised a lot of retail money, and they did it on these, and you're seeing some of these things fall apart where they've done them on these crowdfunding sites. And, there's a lot of danger there, because a lot of these operators that did them on some of these crowdfunding sites are not proven operators. So whereas if you have the backing of some of the largest institutions, they vetted you in such an incredible way because they do such a rigorous vetting job. So I always caution investors, just make sure you're doing your homework on who you're investing with.
So that makes me a good segue to say, if investor wants to invest money in your company with you, what makes you unique and qualified?
Well, so the one thing is, like I said, we have probably, one of the, we've provided to our investors outsized returns compared to our peers. And we've always, and we've audited financials going back 20 years, but we've always overachieved. Every investor of ours have seen that we've overachieved every pro forma we've ever put out there. So if we said we're doing a 15 IRR deal, we've typically doubled, that
Wow.
and then some. So we've always overachieved. So I think our investors see that. We also have the best in class partners, investors in the institutional world. So, we've kind of overachieved what we've always said we've done for them.
Yeah, that's an excellent track record because we can all talk about it. We can all say it. How many pitches have I heard saying, we under promise and over deliver? And then, okay, how many deals have you done? This is my first deal. Okay. Probably not with you today.
Right. Whereas we've bought over 300 properties over 20 years. So we have a very long history, and with probably two of the, our investors on the institutional side, Blackstone being one of our largest investors, Angelo Gordon also being one of our largest investors, are, with very long track records of being just great partners and investors. So that's helped us really come along the way.
That's incredible that you have those relationships. That's just
Definitely.
amazing.
Yeah. That's pretty impressive, because that's a deep pocket people. So what type of investors are you looking at? Who can invest with you? Can you tell us a little bit?
So we do, we try to do, so we started off with our retail, kind of what we used to call our friends and family investors. That's how we started the business. And then we pivoted to trying to do one deal every other year for our retail investors. And then we, while we have our institutional partners. So our institutional partners take up, over the past several years, been taking up 99% of our time. Our goal going forward is to not do one deal every other year. It's really try to do about 6 years to our high net worth friends and family investors, try to do 6 deals a year for them as well. So we don't just, do everything on the institutional side.
Got it.
So we're doing more of those. And, in about a year or 2 years, the goal is to try to get that to 12 deals a year where we can do, so we give the opportunity to both our original investors and some of the new investors that have wanted to invest.
Mina, I had an interesting experience the other day. I was showing properties to a family with 2 kids, and we had 10 to see. After viewing about half, the family was getting pretty hungry, and they really just wanted to continue the other day.
So what did you do?
I went to my car and pulled out a bag of delicious Rickey Jerky. They loved it so much that we're able to continue our day without any issues. All the ingredients are 100% natural, plus every strip is seasoned, marinated, and smoked by hand to give you the best experience and slap you back into the gear. But I need to buy some more.
Oh, just head over to rickysjerky.com and use the discount code, the code REI, for 15% off your first order.
So whether you're a busy real estate agent or just looking for mouth-watering snack on the go, Rickey Jerky got you covered. That's great.
In a way, it's just trying to help out the people around you to move up to the next level. Or what's the reason, Brian?
Well, the reason is, some of it's personal. So, so investing with some of our institutional partners, they're closed-end funds, so that it's not as tax efficient as me taking more of my capital and investing in something long-term that has more tax efficiency. So we can generate a great cash flow and it, tax efficiently to hold for the long term. And so a lot of people, including myself, want that long-term cash flow.
That's the dream, baby. That's the dream. Absolutely. I love that. That's great.
So you mentioned long term. What is long term?
So typically, look, we've held a couple of our assets for 20 years. Now, I don't suggest that that's how long we're holding them for, but those 20 years, some of them are still producing double-digit NOI growth. So it's always, we'll get down and like, oh, so we may have teetered and started hitting 4 or 5% NOI growth, but then we did an LED conversion to create energy efficiency. And the energy efficiency, the return on investment was like a 40% return on investment. And then that popped, the NOI growth even more. Then we were able, we've been able to create ancillary income from either solar energy, or we've done solar community projects where we're renting roof space. So, we constantly have iterated ways to make money and cut expenses. So long-term can mean anything from 10 to 20 years. I would say probably when we stop seeing growth is when we want to be exiting a property. So if we can continue seeing modest growth, then it helps to keep the tax efficiencies. So you keep on refinancing a property, and it's better for all the investors to have the tax efficient cash flow.
Brian, I want to ask you, what editorials do you like to read in a weekly or monthly basis? What gets your attention? Where do you like to look?
Well, I read a lot of stuff, but look, the Wall Street Journal is kind of daily. So that is something I read daily. Then it's Globe Street, The Real Deal, Commercial Observer, peruse through some of the self-storage rags. So it's kind of a little bit of everything.
Okay, that's good to know because I'm hungry. I'm thirsty to understand more, and I'm looking for editorials. That was a selfish question. Thank you.
But I'm sure there is a lot of people that would want to know too. So what markets are you in?
So we're in 18 states, around the country. That stems all the way, from New York to California. So, and states in between. Our goal would be to try to be in half the states and in the country. And then, we have global aspirations beyond that. So we would love to be in South America and in Canada and in Europe. So that's kind of the next, that's more a 10-year plan than the next year plan.
That is great. You guys are spreading. That's awesome. So you mentioned that you guys are transferring from owning the property to financing the property. Are you going to be in non-performing note market as well?
I mean, yes, back in the GFC, we bought a lot of non-performing notes back, where the collateral was self-storage facilities.
Mm-hmm.
And we're doing the same thing now. We are buying notes currently. So we're buying them whether they're performing or non-performing. As long as we can get the appropriate yield,
Mm-hmm.
we'll buy notes.
That's great.
That's awesome. So you have another company that does the management of the self-storage, and it's called Storage King. Can you tell us more about it?
Well, so Storage King USA is our name for the storage brand that we came up with. The name was just me tinkering around 20 years ago, and I was talking to a friend of mine, and we were thinking of like catchy, funny names, and he said to me, he's like, you should be like Abe Froman, the Sausage King of Chicago, which came out of the movie Ferris Bueller's Day Off. So I was like, that's great. And so I was like, let me create the Storage King. And so and then we decided Storage King USA because there was a company in Australia that had the domain. So I wanted a proper domain name. That's kind of how we came up with it.
Wow.
Yeah, that's funny. That happens when you start a company and you have no idea where it's going to go. And then the name grows, it sticks, and you just go for it. It is tricky.
Yeah, you started that management company for a reason. I read a little bit online history about it. Can you tell us why even a property management for the self storage? Because there are so many property managements out there.
Yeah, so we started off managing our own facilities, and we kept managing our own facilities, but then we started buying facilities in markets that we have to take 2 plane rides to. And I said, all right, there's no way we're capable of managing those. And that's what I was thinking. So probably in 2009, we started using other third-party management companies. I'm not going to name names on the third-party management companies, but we've kind of tried most of them out there. And I kept on saying to myself, all right, there's no way we can be capable of managing these properties. But slowly started taking off the Band-Aid one by one and saying, all right, well, let me try this one. And again, it was only one facility, very far away. I still thought it'd be difficult. And as soon as we took over the management for it, our NOI popped by double digits. So we were able to reduce expenses and increase the revenues. I was like, and we did this staggered. So it wasn't like we did it all once. So there was like something in the economy that made storage move. It was like over a period of several years that we started taking over the facilities that we were having third party managed. And so we just realized we were very good at the job. And so we just said, all right, well, we can do this nationwide. And there is something to be said for being clustered in markets, but that helps you on certain expense line items. Otherwise, if you're a good operator and you know what you're doing, you can really operate almost anywhere.
That's right. So you do value add by management instead of just renovation. Okay.
Right. And look, we feel that to be an owner, especially of storage, like storage is different than, say, hotels, where brand means something, or you're staying at a Marriott and you're earning points to get a certain status, to get to your ambassador status, so you can get your upgrades and your free nights. And whereas like storage, it really is, the brand doesn't really matter. Nobody really knows. I ask friends that use self-storage, they're like, oh, and they think they're using my product. I was like, oh, yeah, I store it with you. I was like, well, where is it? I was like, oh, well, that's not us. I was like, what color are the doors? And it's like, and they can't even sometimes remember that, but they're like, oh, I think they're orange or green, and they can't remember even the name of the facility that they're storing at, even though they're currently using it. So he's like, oh, let me pull up my bill. So that's where it's like, but if you're staying at a Ritz-Carlton or a Courtyard Marriott, you know where you're staying.
Yeah,
That's true.
very, very true.
Good point. It's more of a service. It's a service that is needed, and it's location more than anything, right? It's right next to the store that I go to, so I store there rather than I really like this brand, so I'm gonna drive extra 5 miles to go store my stuff there. Yes.
Yeah, not going to happen. Definitely. So for all of our listeners who are here, how can they find you, your company, and if they looking to invest?
Well, you could always Google for Andover Properties, but our website's andoverprop.com. That's Andover with an A. But like they can always find us, or even search Storage King USA. They'll find Andover Properties through that. And we have an investor login, and they can invest when we have deals. Right now, we have no deals to present. We just closed on a subscription for 2 car washes that we're buying, but we always have something to offer out there. Right now is a challenging market because, for the most part, sellers' expectations they've met some buyers' expectations, but they haven't really met our expectations. So we still bid on about 15 properties a week. And, we're not winning, we're winning kind of like one deal a month now.
Yeah, that's the problem.
On like the equity side.
Yeah.
Another selfish question. We are in Florida, and what I've seen is that the growth continues to happen, but it's a little bit more stable. It's not as crazy as it was in the last couple of years. And I've been in the land acquisition business for development for single family homes I noticed that the owners are still with the very high prices in their minds. However, the market is dictating a more conservative price. Is that what you're seeing as well in the self storage industry, Brian?
Well, I think the land. Well, if you're taking land, and we take land even in Florida, I think on the commercial side, you're seeing stuff soften. Especially land. We're seeing a lot of developments up for sale right now and saying like, oh, this is a fully entitled project. But those projects aren't penciling. Even if you almost give the land for free, a lot of the projects aren't penciling because rental rates have come down pretty substantially and interest rates are way too expensive. I do think, you take you mentioned South Florida. I do think in general, even on the multifamily side or the single family side, I think pricing will eventually have to come down too because of the land. Because what I think everyone forgets in Florida is the carry costs are incredibly expensive. So, and especially, it's no secret now, but insurance is basically in Florida is almost tripled in price. So that is really, and construction costs have, kind of especially on the single family and multifamily side is almost, it's increased by about 50% and in some cases 100%. So then your real estate taxes go up and everyone's like, all right, so everyone's saying to themselves, well, I can afford the sticker price, but then they don't really budget out. And that's where I think a lot of Florida is going to run into some problems is they're just not going to realize that these carry costs are more than their salaries can handle.
Very true.
That's the thing. People take it just for the wave. It takes a while for the wave to catch up to everybody. And then we're probably on the other side and people are just catching up. But then that also has an effect on everything because we are a moving economy. It's just so interesting. It's fascinating. And with that, Brian, we just want to thank you for the time that you have given us. I know you are a busy guy, and we just appreciate you a lot. Thank you.
Well, thank
Yeah,
you.
thank you
We'll
for
have
coming
to
and sharing.
thank you, and we'll have to get together soon.